watching CNBC-TV18.
HUL and Asian Paints in focus ahead of earnings. Asian Paints mildly higher, whereas HUL is down by about 1.5%. Both companies expected to report mid-single-digit volume growth.
Persistent Systems trades higher after a good set of numbers in the third quarter. The margin expands while revenue comes in at the upper end of the guided band. The stock is up 3.5%.
Adani Enterprises under pressure after it announces it will raise 20,000 crore rupees via an FPO, which opens on the 27th of January.
UBS downgrades Titan to neutral rating, cuts the target price to 2,600 rupees a share from around 3,000 rupees earlier. They see no potential upside in the stock, citing high valuations and weak expected jewelry demand in FY24. Hello and welcome to Chartbusters. I'm Naishal D'Souza and joining me as always is Mangala Malu. Well, as expected, the global overnight handover wasn't very great. And in fact, the markets are trading with a bit of a cut. We're down close to around 65 points. However, if you're to point two positives, one is that the mid-cap index is doing a relative outperformance. The second factor is that the Nifty bank as well is doing a relative outperformance. And keep in mind, the Nifty bank had moved to around 41,800 a couple of times, and from there we've seen a bit of a bounce. So the bullish sentiment is that 41,800 should hold out in the near term. And the hope is that we move to around 42,600 odd, which is a bit of a congestion zone. Hey, Maglam.
Hi, Nigel. You know, the Nifty bounced about 30-40 points from the lows of 18,060 or thereabouts, which also is in line with the 20-day moving average, which is crossed a couple of days ago. So maybe after a big rally that we've seen in the last couple of trading sessions on global weakness, we saw a bit of a dip. The test will be whether this dip gets bought into or not, because the second half, we have the expiry as well, and a lot of puts have been written at lower levels.
You know, Manglam, that's the piece that we put out earlier today. That is there a case that the Nifty can outperform today, despite that weak, global handover? A couple of points are. One is we have underperformed.
Yeah.
Second factor is that the data that came in overnight was pretty good, from the FIs in particular. And weekly expiry, the last few times, if you have bought on weekly expiry and you got closer to the bottom, then you've got a 80 to around 100-point bounce. Let's see whether or not that plays out on this expiry as well. Sachidanand Utekar joins us. Hi, Sachi. Good morning. Well, the data points that came in yesterday actually suggests that maybe the Nifty can make a bit of a dash towards that 18,350 odd mark, which will be a big resistance zone. What's your sense? Will you buy this dip, or do you believe we're going to go back to around that 17,900 odd mark?
Good morning, Nigel. Nigel, I think if you look at the overall structure in the last couple of trading sessions, even we were very optimistic on the Nifty, and there was a probability of a strong pullback unfolding. So that pullback has already unfolded well, but we see resistance close to that 18,240 to 200 kind of a mark. So unless we don't see a weekly closing about the same, we may not expect an extended pullback. But if you look at today's data itself, both the indices are concealed within their previous day swings range. So ideally, I think unless we don't see a breakout above 18,160, there is not the probability of a bullish trade remains low. And on the lower side, I think that support of 18,050 would be very crucial. Unless we don't see Nifty slipping below those averages, we may not see that immediate downtake. So probably, I think today it could be a range-bound day when it comes to Nifty. Overall, I think the trajectory still remains sell on rise. But when it comes to Bank Nifty, I think the hurdle of 20 days exponential moving average, which is around 42,500, I think that will be crucial for the Nifty Bank to start outperforming. Even right now, the data is suggesting that that hurdle of 42,500 may stay even for today's trading session, and we may see some slippages towards 42,100 during the second half of the day. So right now, I think both the indices are trending within their respective range. Unless we don't see a range breakout, we may not chase the intraday momentum.
Take that point, Sachi. A couple of themes are doing extremely well this morning. We have cement as a theme, which is doing extremely well. ACC has moved to the high point of trade, giving it companies India Cements, Ambuja Cements, etc. And the QSR consumer discretionary space is doing well. We have Jubilant Foodworks, which has moved to the high point. Page Industries, which is doing well. From the lows, it has recovered. And at the same time, Devyani International was one of the stocks which was doing well all through the morning. So we have seen, some bit of moves in individual stocks, even as the mid-cap index is outperforming. Your thoughts? What are the individual stock picks that you have for us today?
Good morning, Mangalam. Mangalam, Jubilant Foods is something that you highlighted. I think the structure is really good. After 9 weeks of consecutive lower top, low bottom formations, finally the stock is finding some support near its 200 weekly exponential moving average, which is placed at around 500. So this particular level has been respected well. Yesterday we saw some unwinding positions, and probably today the breakout which has happened above that 505 mark should elevate the prices towards that 520 525 zone. So I think building long positions in Jubilant Food should be prudent from here on. From a trading perspective, the stop loss should be placed at 499, and a positional target of around 525 could be seen in a day or so. And on the short side, I think when it comes to some of the cement packs, I think Ultratech Cement, we saw some unwinding of long positions yesterday. Today, the stock slipped below its 5-day exponential moving average, and after that, we have seen some more additions on the short side. So probably this particular slide may continue towards its 20 days exponential moving average, which is placed at around 7100. So we are advising creating short positions when it comes to Ultratech Cement. The stop loss should be placed at 7330 for an immediate target of around 7100.
All right, Sachi, thank you so much for joining in and giving us all those details. With that, we'll simply do a short break. On the other side, we get you excerpts from our conversation with the management of Persistent Systems. The company has reported a good set in their third quarter numbers. The stock's doing extremely well. So let's hear out from the management. Stay tuned. There's some recovery from lows in a couple of names. The IT index has moved off lows, and Titan too had opened lower, then has recovered almost 1% from today's low. And this morning we had a note coming in from UBS, who has downgraded Titan to a neutral rating, and they've also cut the target price to around 2,600 odd rupees from 3,000 rupees. Now the reasons why they say they are downgrading the stock is because one, there has been a rise in gold price. Secondly, people who had saved money during the pandemic, etc., now those savings are depleting, so that could impact growth in FY24. But I think the real reason is the valuation concern that everyone has on Titan. It's never traded cheap, and at 56 times FY24 earnings leaves little room for an upside, and that's the basis of UBS's report. However, from a long-term standpoint, they are positive on the company's potential. So let's see where it goes from here. The stock obviously has corrected about 15% from highs and recovering from the lows. Talking about stocks, IndusInd Bank is the other one on our radar after reporting its third quarter numbers yesterday. Abhishek joins in to tell us more about the numbers and also what brokerages are making of the same.
Well, it's certainly more hits than miss for IndusInd Bank. Now, records galore in Q3 FY23. It's 9th quarter in a row that both YOY and quarter-on-quarter you are seeing operating profit growth. So, YOY, it's the best in last 4 quarters, and sequential growth, it's the best in last 12 quarters. The net interest margin is at 10-quarter high of 4.27%. ROA and ROE are one of the best in last 4 years or even more. So, ROA is the best in last 13 quarters and ROE is the best in last 12 quarters. RWA to advances, the risk in the balance sheet is actually reducing. So it's one of the best in last 15 quarters, coming in at a little under 120%. The NII growth on a YOY basis at 18.5% is perhaps the best that you are seeing in last 11 quarters. Asset quality, one of the best that you are seeing in last 2 years, given the fact that gross NPA ratio is at just 2.06%, 8-quarter low, and perhaps the second lowest in last 16 quarters. However, the flip side of the result is the MFI portfolio or the microfinance portfolio. That saw deterioration in asset quality. The gross NPA ratio inched up to 3.75% when compared to 2.91% in the previous quarter. So in absolute value, the bank had a gross NPA increase of 525 crore. 268 crore of this was contributed by the MFI portfolio alone. Disbursals in the MFI, now that's a staggering 8,928 crore for the quarter. However, AUM growth is just 71 crore rupees, which means that higher repayments have been seen in this quarter. So P&L, both in terms of NII and PAT, it's a beat on our poll. Brokerages remain bullish on the stock. The target price range from as low as 1386 to as high as 1600 per share. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, Persistent System, that's a stock in focus. It's reacting positively to a set of numbers. Rima caught up with the management earlier today. Mr. Karla, he gave them a sense in terms of the way ahead. Let's hear him out.
A sharp drop-off that you're seeing is pretty much due to the seasonal furloughs that we see. If we look at the furloughs this quarter gone by, for the industry, it is a little higher than what it used to be in the regular terms. For us, the furloughs came in at about 1.5%, and it also contributes towards lesser number of working days in the quarter due to Thanksgiving, Christmas, and other holidays, both in India and the US. So overall put together, roughly about 2.5% is roughly the impact because of these, both put together.
So the one-off impact would be 2.5%. Are you seeing higher furloughs extend into Q4 as well, Sandeep?
Some bit of furloughs may extend into Q4, but not at the extent of what it was in Q3. So maybe in the range of about 0.5% to 0.75% may still extend.
And this is not normal, right? Furloughs extending into Q4, and even the quantum of furlough impact, 1.5% in Q3, estimated 50-75 basis points in Q4, much higher than normal, right?
Yes, so it is higher than normal, and it is not lost on people, the macroeconomic environment that we all talk about. The more we talk about it, everyone is trying to optimize, and everyone is trying to deal with their own businesses. And the customers who have been there for us for the longer term, we have to work with them on optimizing their businesses. And if it means working with them on the furloughs, so be it.
Can you talk about your top client revenue contribution, down 12% quarter on quarter, 43% lower on a year-on-year basis?
So as far as the top client is concerned, this is a planned ramp down of certain product lines that we have been working on. And this started last quarter. If you look at it, there was a sharp decline in the last quarter. Part of it is the tailwind the headwind that we are seeing in this quarter. As far as the overall revenue from the top client is concerned, we are pretty hopeful over the next several quarters, we'll see a sharp reversal towards the upside in the top customer as well.
Has the top client revenues bottomed out at current levels of $19-20 million?
Yes, pretty much they are bottomed down at this level.
Can you explain what led to the drop in utilization, 230 basis points lower quarter on quarter? Was it purely on account of furloughs?
No. So the utilization, if you look at it, we have to break the utilization into two parts. We hired roughly about 3,200 of the freshers who we basically take about 6 months before we put them into the utilization metric. So they have flown into the utilization metric. Outside of the freshers, our utilization came in at 83.3%, which is higher by 340 basis points. Including the freshers, it came at 77.6%. So that is the fresher impact that you're seeing in the utilization.
Got it. And can you explain the improvement that we've seen in margins? What contributed to it?
So the improvement in margins is an account of a number of factors. So if I look at it on one side, you have the higher utilization that we talked about. So the lateral utilization that we talked about moved up by 340 basis points. We deployed a significant number of freshers. So please note, we have been talking about 3,200 freshers that we had hired over the last several quarters. This was the first quarter where roughly about 20% or more of them got to be billable. So from that perspective, that is a cost that was sitting in our books, and this became a very good margin lever for us. The other parts are economies of scale from revenue growth, as well as the dollar rupee movement and the IP revenue growth that contributed to the other extent in margin improvement.
You started off by saying the current macro environment is not lost on your clients. Should we expect that revenues will continue to be under pressure? The deal wins that you've been clocking it could come down. Is there a risk?
So look, there could always be a risk, but just to give you some data points, if we look at our top 2 customers, outside of that, the top 50 customers grew at a healthy 7.7% sequential quarter on quarter and 53.8% year on year. As a company, we have clocked the highest ever bookings in this quarter, which is a TCV of $440 million. This is the first time for a company that is doing $1 billion revenue run rate. We have crossed 400 millions in total contract value. So from those parameters, we are pretty optimistic that the deal wins and overall the momentum that we have, despite the macro, will carry us well through the next year.
What could you end FY23 with, and any initial projections for FY24?
So I don't want to give you any forward-looking indications, but if you look at the run rate, we are at a fairly healthy clip. And given whatever run rate we have, we will land up at least at 30% plus growth for FY23. And this is on the back of 35% for the FY22 part. And the order bookings are very healthy, and so the momentum should continue.
30% FY23 revenue growth, but in 9 months, you've clocked in 39% dollar revenue growth.
So I don't want to give you exact numbers. That's what I'm saying. We don't give forward-looking guidance. The least we will do is that much, and look at the order bookings. Order bookings are a leading indicator of what is to come.
Q4, how would Q4 compare with Q3? Better,
So
worse,
the pipeline
same?
is pretty good. The pipeline is pretty good in terms of Q4. And obviously, we have to let the quarter pan out. We are pretty optimistic about the order book for Q4 as well.
Okay. Margins at 15.4% is the best that we've seen in the last many quarters, in fact, many years. Could this be the new base you're working with?
So our aspiration is to stick to this, at least for the near foreseeable future. And as a company, our aspiration over the longer term is to take it up by 200 to 300 basis points.
And how long will it take for you to achieve your aspiration? 200, 300 from current levels would be 17.5%, 18.5%. When could you achieve it?
Over the next 2 to 3 years, as we look at the revenue trajectory, as the revenue increases, there's a benefit of scale. And also, as you mine your customers well, so if you look at our customer metric, 3 years back, we had roughly 50% of the customers at the level of $5 million plus. So we've gone from 17 to 34 over the last 3 years. And as we increase that metric, as we increase our revenues, obviously all of these pans out towards the economies of scale, giving us the margin lever as well.
Your billing rate has come down though, right, for the second consecutive quarter?
So the billing rate, again, if you look at an average, it is also impacted by the furloughs, as well as it is impacted by overall, if you look at it, the number of working days in the quarter, also a mix of on-site, near-shore, offshore. So as we expand our operations in Mexico and Costa Rica, our on-site billing rates may look a little skewed towards the downside, as the number of working days were lesser and the furloughs were there. That also impacts the metric. But overall, we are pretty confident it is in the right direction and it is inching up.
And one final question on hiring then, Sandeep. Would your hiring projections have come down given the way the attrition has moderated and there is some uncertainty on demand? What would be the new hiring projections now for FY23 and FY24, and how would it compare with before?
Okay, so I wouldn't say there is an uncertainty of demand. As I said, this was a record high quarter for us for order book. There's a very good pipeline that we have, which should convert in the quarters to come. Now, if you look at the hiring, if you look at the metrics like utilization, on one side, we had 340 basis points increase in lateral utilization. We had significant amount of freshers being built. We are carrying an inventory of roughly 2,500 plus freshers who are yet not built. So there is a significant amount of inventory we have built up, capabilities that we have been training people on. And so we'll have to factor in all of this, along with the fact that attrition has come down significantly. So the need for hiring more to replace the attrition backfills, that has also come down. So from that perspective, the net hiring may come down, but overall, the demand trend is in a very positive direction.
All right, so a strong commentary coming in from the management of Persistent Systems out there. The stock, which was already doing well, has moved to the high point of trade after them having spoken about the outlook for the year. With that, we'll step into a short break. But as we do that, here's some important information for you, our viewers. Don't miss out on the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the full list.
Well, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Madhu standing by to tell us about a stock that she's tracking closely. Madhu?
The stock of AU Small Finance Bank had a tepid performance in the current fiscal. However, post-COVID, the growth is picking up. Interestingly, close to 94% of the book is secured, lending adequate comfort. Bank's deposit profile is improving, asset quality remains pristine, and AU is making the right kind of investment for the long haul. Finally, it has recently raised capital, thereby preparing to grab market share as the economy comes out of the shadows of the pandemic. While the first quarter was marred by trading losses and margin pressure, the bank posted a strong show in the second quarter. With all the ingredients in place for a successful journey, perhaps the optically expensive valuation is a dampener. However, given the bank's hunger for growth with quality, we see a steady earnings growth in the next 5 years, making the stock an ideal long-term pick. Moreover, the current valuation is at a discount to its IPO valuation of 2017.
All right, on that note, we'll wrap up on this edition of Chartbusters, but you stay tuned to CNBC TV18 Trading Hour comes up next.